YouTube, what's going on? Today we're going to be bringing it back to the roots of my channel and doing an in-depth analysis of my most recent swing trade that was able to run 121%, and that is on none other than CEI. I got into CEI at 69 cents. You can see it right here, and I ended up selling the rest of my position. Of course, I locked in partials on the way up, so I didn't make 121%, but I was able to hold on to it up to 121%, and I sold the rest of my position at $1.54. I could have done better. I'm going to break down the reasons why I could have done better, so hopefully some great lessons for you. But ultimately, this is going to be an in-depth analysis. Hopefully, you'll be able to learn how to hold stocks for the big move, how to see the big picture trend, and ultimately how to make those profits on your day trades and swing trades using a simple but repeatable strategy to make those gains. So here is CEI. As you can see, it has gone on a monstrous run, so much volume on this play. It actually ran from a low of 34 cents and ran up to a high of about $1.85. So I didn't get the whole move. Obviously, I am not good at buying at the exact bottom and selling at the exact top, but I was able to get a significant piece of the pie, meat of the move, and I was able to hold this one for multiple weeks and was able to kind of look at the big picture trend and had the confidence to hold until my plan broke down. Now, there's a lot of things to talk about on CEI, so I'm gonna do my best to kind of keep it as structured as I can, but let's just jump right into it. So CEI, this one was pumped up, massively on social media. I'm sure you've seen a lot of traders who have been in CEI. I didn't get into it, like I said, until this area here. 69 cents was my average based off of this 67 cent level. So let's just first break down, my plan around the trade, why I got into it, and ultimately what my plan was in terms of profits going forward. So as with all of my trades, if you've seen any of my videos, I recommend that you do. Most of my trading is based off of technical analysis, meaning I like to buy support and I sell at resistance. And my A+ setups, I like to use levels that are from the historical time frame, the big picture levels. So in this case, I really like to use weekly chart levels. So this stems back on the weekly chart. So here on E-Trade, switch it to the weekly time frame, and then what I do is I go to the line chart, and then here if we zoom in, we just have to ask ourselves, where are the previous levels of resistance? Let me just clean up this chart a little bit, just so you can see. So we ask ourselves, where is the previous resistance? If we see the chart is like this, if we go back to the first day that I got in, all you have to do is you have to mark off horizontal levels where you have seen the price stop in the past. So if we just zoom in here, you can see that I have these two levels down here. Oops, did not mean to move that. Oh well. You can see there's a little top right here. I'll use the rectangle tool right there near 67, and then right here near 69. And there is another level here, which should be yellow. So if you ever watch my videos, I like to use yellow just to depict weekly chart levels, and red to depict daily chart levels. So you can see I have a few levels here, 67, 69, and then ultimately up here at 73 cents. So that's where we are starting off of. And just for good measure, whenever I am looking to trade a stock, while I'm here, I'll also look at where is the next levels of resistance. So we just go left and upwards, and we look at the next top is right here near $1.31. Mark that off. And then next up we have right here at $2, and then if we zoom out even more until we see the next level higher, we see up here at $2.60, and then from there it is just massively diluted, reverse splits. We're not going to go into that right now. So we have the levels from the historical price action, and in terms of entering the trade, it was purely based off the fact that it was being pumped on social media. Lots of retail traders were getting into it. And if you look at, the long-term trend of CEI, it is a very crappy company. Don't get me wrong. I would never want to invest in this long-term. But if you look ever since like 2020, it does have history of spiking. It regularly likes to run from below $1 and squeeze up into the $1, $2, $3, even $4 range, and then it sells off back down. And it's kind of this cyclical pattern that it goes into. Ultimately, it sells off back down because they are a dilution machine. They have lots of offerings, they do lots of reverse splits, but there are these opportunities where when the chart sets up correctly, it can go on these monstrous squeezes. So I didn't want to play it until we could see that there was a significant breakout on the big picture. And like I said, that was when it was able to cross over and it had this significant breakout. Let me just zoom all the way back. You can see here was day one where it really, spiked up. It ran up and it tested resistance at 67 cents. And then in after hours, it was able to break out through that, ran up to 76 cents. So that to me is a clear breakout of that 67, 69 cent area. So then my strategy is to take the risk and buy that previous resistance as new support, expecting it to hold. And if it does hold, then I can hold and take my profits upwards. And then once I saw it was able to hold that support all day, I finally was able to, take the risk, and I sent orders at 69 cents down to 67 cents, which I alerted in my chat and on Twitter, as you can see here, risking ultimately that level. I didn't know it was going to hold as support, but I'm taking the risk because if it can hold as support, then as we saw on the weekly chart, the next levels of resistance that we see are at 73. There's a daily 200 moving average. There was $1.31, $2, $2.60, and so forth. And because of the history that this stock has to go on big runs, you can have a thesis that, hey, maybe it's setting up for that run again, especially considering how much volume is coming into this stock. So usually with plays that are like this, it is kind of more advanced or, based on intuition, but I really like to base my trading off of the 30-minute chart. So as you can see here on this 30-minute chart, especially if you go to the line chart, this thing was really respecting that weekly chart level. And what that basically tells me is that lots of traders are kind of in sync and they are all kind of working together on using the same levels. And that's a big bonus for my type of trading. So when I got into 69, I just planned this as any other trade, even though I had, fairly good confidence that we could see a big rally. I ultimately had to respect my own rules. That's just part of disciplined trading. And I locked in my first partial profits at 73 cents, which I, had let all my members know, and I posted on Twitter as well. And then after this breaks out, basically, whenever you're trading based off the chart, you have to understand that when you have the stock trending, there is one very simple rule that you can use to stay patient and allow the stock to develop. And that rule is the same rule that we used for our entry. If we go back to the weekly chart, the whole thesis behind this trade was that if this previous resistance from the weekly chart can hold as new support, then we should see it run up to the next levels of resistance. So if we go back to the intraday, 30-minute chart, it's the same rule that we use to hold for that longer time frame. We have to tell ourselves, all right, now that it has broken out over 73 cents, as long as it can hold above 73 cents as support, then we should see it continue upwards. And of course, it's going to run into levels of resistance. It's going to pull back, but ultimately, if it can hold that next level of support, it is still in an uptrend. And that does not break until we see signs of weakness, which we'll get into at the end of this video. So as you can see, had a strong breakout. It ran up into what we call the daily 200 moving average. That is also a significant level of resistance that I use. And I locked in my next profits there, as I said on Twitter and in TradeBuddy. Having to be diligent, having to be disciplined, locking in profits along the way, ultimately paying myself for a good trade. And after I locked in my profits into that daily 200, my main goal was to try to re-add shares back at 73. Ultimately, it did not pull back far enough. You can see it had a small pullback down to 80 cents, and then next day it gapped up. So then we see it broke out through that daily 200 moving average. And once again, guys, we just use that same fundamental rule of technical analysis. As long as previous resistance can continue to hold as new support, this stock is still in an uptrend. And here is where you really want to avoid using smaller time frames like the 1 minute chart, especially because as you can see here on the 30-minute chart, it never truly broke back down below 89 cents. All of these candles that did go down, they were bought right back up, ultimately causing wicks. And if we just use our secret line chart, you can see it never broke support. Whereas if you're using like a 1 minute chart, you're able to get stopped out a lot easier because it seems like there's a massive panic and it seems like it's breaking support. So, whenever I'm holding these like swing trade stocks, you really don't want to make your choice whether or not it has broken support until you see the half-hour candle truly break that level, and then you can have your plan to exit the trade. But as you can see here, held support, so I was just holding this all through these days. Then it eventually went for that breakout over $1, ran up to $1.31, and of course I locked in more partial profits into that weekly chart level, being a disciplined trader, of course not knowing how far the stock can go, just using the volatility to sell into the strength. So then from there, you can see it was able to continue even further the next day, and it broke out through 131 and it ran up to $1.63. So from here, guys, we do the same exact thing. As long as it can hold previous resistance as new support, this stock is still ultimately bullish. Now, here in this case, I was a bit more wide with what I considered as previous resistance, because if we just kind of ask ourselves, what level did we see this break out of? And that level was actually down at $1.01. So here on this day, on the 10th, I was actually okay if it did pull back down below $1.31. Ultimately, if it pulled back and held $1, the trend to me was still ultimately bullish. But you can see it held $1.31 very strong. Once again, it did have some wicks, but they were just wicks. On the 30-minute chart, they were bought right back up and ultimately held solid support there. So then we have to just tell ourselves the same exact thing. As long as previous resistance can hold as new support, there's no reason to sell. Just let the stock do its thing. Just give it the time that it needs to do its rally. And then if we just draw the next level of resistance. Now this level here at $1.62, as you can see, we did have some candles that did break below, but this to me wasn't as significant because 162 was not a significant level from the daily or weekly chart. It was just what it set as resistance on its intraday move. So all through this time, my risk level was still down at 131. As long as it held $1.31, I was still fine with it. Just let it do its thing and let it move upwards. It was around right here when, because the trade was going on for so long and it was getting pretty volatile and I was holding for like over a week now, I did choose to move up to this 60-minute chart and base my levels off that just to have a bit more wiggle room and allow the stock a bit more range. And as you can see, I had drawn this level here at about $1.54. And right here on the 14th, after it had broken out and ran to $1.70s, I said, all right, I'm going to allow this now to still remain bullish as long as it holds that previous resistance as new support. And here's where I kind of did make a mistake on it, mainly because this 154 level, yes, it was previous resistance, but it was only previous resistance on this specific move, not on the big picture. And you'll see what I mean here in a sec. So ultimately, it was holding 154, fairly well. But then if we look at what happened today, they did drop some, to me, it was very bad news. They basically announced that all of the offerings that they have done since 2016 were not reported correctly on their financial statements. So they're going to have to update all their previous financials, and that would probably have a huge negative effect on how strong the company looks. And ultimately, that was bad news to me. And you can see it actually panicked down. It did bounce right off of $1.31. Here at this point, I had decided, all right, you know what? This is, fairly bad news. It did break through 154. I would show you on the 30-minute chart, but you can't see it because it happened in pre-market. However, even if you look at the 30-minute chart on Thinkorswim, which I'll just post like a screenshot here, it did overall hold 154. So I did kind of jump the gun, and I was a bit, too hesitant to keep holding it. It did overall hold support, and then it broke out higher. So at this point, I had sold the rest of my position back into 154, and I exited my entire trade, and that's where I got the 121% figure from. That, to me, looking back at it now, of course, in hindsight, wasn't the best move, mainly because it did hold my main level on the 30-minute chart. What I really should have done on this trade is wait until the trend broke down. So what I mean by that is, as we've said through this lesson, you want to keep holding a stock as long as it's able to hold those big picture previous levels of resistance as new support. So you can see the next level we have is right here near $1.72. Formed a nice little, like wedge pattern there. And then today it broke out through it and it ran fairly high. Now here, I kind of want to go into some like trader psychology just so you can kind of understand how more advanced traders will look at the markets and look at price action. And the interesting thing about this breakout was, if we take the context of what happened with this bad news, lots of traders sold into this panic down at 131. Lots of traders like myself, they sold it into this bounce thinking that the stock was dead. And also lots of short sellers probably said, all right, now it's time to pile into this. I'm going to short into these 170s, 160s, and so on. And now imagine everyone thinks that, okay, now it's done, it's going to die, and it breaks out further, right? So anyone who is undisciplined and panicked into this massive red candle, or whoever, went short into this resistance, when they see it break out, they're going to realize that they were wrong. And all these panic sellers will very likely chase back in, and they'll buy over this breakout over 172. All these short sellers who shorted into this will probably want to cover and cut their loss on this breakout. So here you have a situation where, just based off of what happened with this news release and this candle, there's potential for lots of new traders to be bought into this breakout above 172. So imagine what's going to happen if it fails to hold that previous resistance of 172 as new support. You're going to have lots of traders here who are now trapped and who are going to want to sell because they were wrong in chasing the breakout. So that kind of gets into the next part of this lesson, where it actually did not hold that previous resistance as new support. So this right here is the very first sign that the trend is truly breaking down. And if I was a perfect trader, and if I was, super patient with letting my stocks run all the way without selling any profits, like the main goal with my strategy would be to wait until this happens and then sell into 172 as resistance, understanding that the big picture trend has broken down. It is no longer holding previous resistance as new support. So obviously, I can't predict the future. I'm not always 100% right, but the way I see CEI right now is the trend is done. It had a failed breakout. It trapped a lot of chasers here. And now that it is holding that previous resistance as resistance again, I do expect tomorrow to be a big red day, maybe sell off. and then it's going to try to break through support and ultimately sell off back down. Obviously, it could hold support. It could just be one big trap. But ultimately, with my style of trading, which is just, trading a system, my entire goal is just to stay in the trade until my system tells me to get out. And when that happens, everything that happens afterwards doesn't truly matter, because the main thing is that, lots of traders will get into the market hoping that they could buy the exact bottom and sell the exact top. And that's really hard to do consistently. What you can consistently do in the market, though, is build a process and build a system of trading with very strict rules and have discipline in following those rules wherever they show up in stocks that you trade. Like I said, at this point, I do believe CEI is pretty much done. That's what my system tells me. And if I was a perfect trader, I would be selling the rest of my shares into that 172. And whatever happens after now doesn't matter. If it breaks out higher, I'm not going to chase it. If it sells off lower, then hey, I was ultimately right. But that's kind of the process of trading a system. You just got to follow those rules as best as you can, and when they tell you to get out, you got to get out. Using those higher time frame candlesticks will allow you to hold these type of swing trades a lot longer. The way that I have built an edge in the market is to use those bigger picture levels from the historical chart to find levels of support and resistance. So I messed up on uploading this video on time. It's about a week after I recorded that lesson on CEI. And I just want to give a quick kind of update and follow through of what I meant when I said that, as far as my system goes, the time to sell was into this 170s. And as you can see here on this chart, the next day is right here on the 17th. It did ultimately set a lower high, rejecting that 178, 180 area. And over the next few days afterwards, it did sell off quite significantly, breaking down through multiple levels of support. It did end up holding overall, and it has squeezed higher now up into the 280s. And what I want to make very clear for all the kind of newer traders who are going to be spamming the comments saying, oh, you sold too soon, you were wrong. I wasn't wrong in terms of following my strategy, right? Because as far as it matters to me, I know that the way that I trade and the way that my kind of mind works, I wouldn't have been patient to hold through this pullback because it wasn't really holding significant levels too well. It did overall hold 131, but that wasn't really what I was planning for. And my choice was correct in selling here. Now, the next question is, okay, well, it went higher. What do you do? Well, the thing about the way that my strategy works is I know that the trend isn't truly upwards until this resistance breaks in the 178. That was kind of the main resistance. So after it broke out through that and it gapped up the next day, it did give an entry opportunity. You can see here, after it had kind of found its strength and it broke out, ran up into the 198 area, during that after hours and the pre-market next day, look where it held. It held that critical level of support again, 178. So if you sold at 178, expecting the trend to break down, and then it squeezes back up, it's fine because you will most likely have an opportunity where you can buy back in once you know that the trend is back in play. And I did buy back into the 180s. I did take the first profits at 260 weekly, and I'm holding the rest overnight, seeing what happens. So just want to give that quick update. As I said, my goal in trading is not to buy the exact bottom and sell the exact top. The goal for every trader should be to follow a specific system that they can repeat over and over and over again and win consistent profits over the long term from the stock market. Hopefully this helps you out. If you have any questions, feel free to let me know down below in the comments. If you enjoy trade breakdowns like this, let me know and I'll do more of them as they come up. If you want to follow me on Twitter, I have been posting lots of my kind of analysis of the market and lots of my entries and exits on Twitter, so go check that out. And of course, if you want to trade alongside me and my team at TradeBuddy, we do have a 14-day trial to join the room, join the program, and ultimately accelerate your trading to the next level. So hopefully you enjoyed. If you did, hit that like button. Make sure to subscribe to be notified of future videos, and I'll see you in the next one.